In this video, I'll be teaching you everything you need to know about trading the fair value gap. What time frame, and can you use different time frames? So in this video, I want to go over everything I can think of on understanding the fair value gap, because there's a lot of nuances that unless you know about, it can be very confusing trading them. And if you have the wrong ideas and the wrong understanding of them, it can lead to a lot of damage in your trading. And I think ICT tries to convey these nuances, but unless you watch all his content, it's like solving a really big puzzle and it's really hard to understand. So I'm going to break it down step by step, what to do, how to do, and then we'll go in the charts and find examples, and then we'll do some replays so I can show you guys how I trade them exactly and how you want to look for reactions before you take the trade. So let's go ahead and get into the content here. The basic definition of the fair value gap: the displacement of price leaving a gap in between two candles. It's a 3-candle pattern. Let's go over the basics here, how the pattern forms. So the bottom here, you see the first candle closes, and then the second one pushes up above the first candle, creating a little gap there, and then the third candle closes, and that's the end of the pattern. So next slide here. So as you see, there's 1, 2, 3, and then that gap, that displacement between the candles, 1 and 3, that is the fair value gap as we know it. Now here's the next slide here. This is an example of a bearish fair value gap. You're just going to count them backwards, 1, 2, 3, going down. All right, here's the next slide, fair value gap characteristics. All right, so obviously the fair value gap acts as support and resistance. Price will return to the fair value gap. Most of the time, not all the time, there's circumstances where it doesn't. And I've noticed that it works on all time frames, from the 1-minute chart to the hour chart. And I'll show you my favorite time frames to mix the two together. And so let's go ahead in the charts and find examples. And after that, I'll do some replay and we'll see exactly how price reacts to fair value gaps and how that can help you. Okay, so the first thing I want to talk about here is the OTE zone, also known as optimal trade entry. So premium versus discount and discount versus premium is a good starting point, but to use the fair value gaps properly, we have to go a little bit deeper in understanding here. So this is a 0.5 through 0.79 retracement zone. So what I found is when I'm trading fair value gaps, this is the zone of the current leg on the time frame you're in that is going to give you the best chances of the fair value gap working. So let's go ahead and head over to I have a 15-minute chart saved of some price action from Friday. So you see this leg here in the time frame we are on. So this leg that we're in right now on the time frame. So if you jump to a 1-hour chart and you're using premium versus discount in that, but you're trading the fair value gap on the 15-minute work, it's not going to work. Premium versus discount of the current leg that you're trading in. So let's go ahead and measure this. Okay, let's bring this down. So you can see that it closed within the 0.79. So that's very important. And then this is going to allow you to have a criteria for entry if you're just beginning with fair value gaps and ICT concepts. So you don't want to be taking every fair value gap you see, or else it's just not going to work. That just period. Like if you're just taking any fair value gap that you see, yeah, you may get a little bit of a reaction there, but you're not going to get more than a scalp out of it, and it's just going to fail and end up being a frustration for you. So using OTE, give you like a rule-based set, is going to help you a lot. So let's go ahead and go on to the next thing I want to teach you guys here, which is going to be combining time frames and using them as a point of interest to increase your odds of fair value gaps working. So let's go ahead and go on to the 1-hour chart here. Okay, so here we have the 1-hour chart. There's a fair value gap here that I want to show you guys. Okay, so this is a 1-hour fair value gap, and then we're going to go down and look at what's going on here. So in here you have another fair value gap on a lower time frame, and see how it has this whole fair value gap to mess with. Okay, so I'm going to explain the V entering and exiting as an example for how to enter these fair value gaps. This is a concept that really opened my mind. So price is coming down, you're expecting a reversal at the fair value gap, right? So let's say, as some people teach it, and ICT teaches it, I believe, to put a limit order here, right? But you don't know if the fair value gap is going to hold, do you? I mean, we don't know. I mean, you can be pretty certain, but you're never going to be 100% certain. So where are you going to put your stop? This doesn't exist yet. This doesn't exist yet. So are you going to put your stop below the fair value gap that likely will get wicked through sometimes? Or are you going to put it below a price action order block? Or, I mean, that's what makes it hard. You don't know where to put your stop. But if you just wait a minute and wait for this, right? You wait for the V, you wait for a reaction, right? Now you have a reaction, wait to see if the candle closes inside of the fair value gap. And then once it closes in there, so let's say this is where the candle closes. Now you're entering here, right? And now you have a clear area to put your stop. That can be your stop loss, because you know that's where it bounced out. So now, which one has the better risk reward? This one. You got a better entry. And which one do you have a stop loss to be able to place a stop loss, a proper stop loss? It is swing low here. You get what I'm saying? Like, this is just a better way to do it. And I understand, like, I used to have to work and trade at the same time too as well. And I understand that you're doing other stuff, but maybe put a an alert in for when it enters your area where you'd like to get long at, and just watch. You know, this is trading this side of the V is not a good idea because we don't know 100%. I would say, like, in here on a good day, your chances of winning are let's say 50%. You have a 50% chance of the fair value gap holding. So on this side, you have a 50% chance. Once you see a reaction, I don't have the actual data on this, but I'm just guessing it's 75%. I don't know the RR that you guys trade or anything, but you have 75% of getting at least 5 points if you wait for a reaction first and it starts moving. And then once it does that, you want to make sure that the top of the fair value gap gets blasted through. You don't want to wait to see. So you see what I'm saying? 50% chance of holding. You don't know where to put your stop, because a lot of times fair value gaps will get wicked through, but will close within. On this side, you have a higher win rate. You know exactly where to put your stop loss. It's a better entry, better risk reward. You know what I'm saying? So I hope this guys helps you. So we'll go ahead and move on to the next concept here, and that's what it actually bounces off of. So it's gonna take me a second here to find the that in the price action on the 2-minute chart. So just bear with me. Okay, here we go. Zoom in, or we can zoom out so you guys can see what I'm talking about here. Let's smush this down, make it wider so you guys can see. So if you look here, you have a small fair value gap right there, and then there's another one right here. So this is the one that actually bounces off of. So we took a 1-hour fair value gap and highlighted it, and then we went down into the entry time frame that we choose, which I prefer the 2-minute chart, but it's whatever you're most comfortable with trading. So once you have the 1-hour fair value gap highlighted, then you go into the time frame of your choice, which for me it's the 2-minute chart. You can use the 1 minute, 3 minute, 5 minute, whatever, and highlight a fair value gap you see on there, and then see how price bounced off of this. Let me delete this one. It didn't react to that one. Didn't even get down there. So it comes into this fair value gap right here, and then bounced, and then it ends up going up for the rest of the day. So this is right before the New York opening. This is the news release happened right then. Okay, so we have a fair value gap here. See how it's rounding? That's beautiful. That means it's most likely gonna work. So I went ahead and put an order in and put my stop right here. It is a 1 minute fair value gap, so I'm not all that confident in holding, but this is a good example. If this was on a 2 minute chart, this would be beautiful. So there's a small gap here, so I'm gonna move it down a little bit, and hopefully the red candle acts as support here. So see how it's rounding? It's respecting this fair value gap. We'll see what happens. It's putting in a failure swing here. So if you're ever in like a bullish or bearish fair value gap, and you see if this continues to hold, that's a failure swing. So okay, so we have blast off, so it worked. So we have rounding. That's what you want to see. You want to see bullish reaction, respecting, then get long. Once it bounced here, put in this green candle, like right in this area would have been a good area to get long. So see how it's pushing up like that? That's exactly what you want to see. And this is a beautiful example of it rounding. Most of the times when fair value gaps are going to work, it will round. And it's the same for in a downtrend, it's rounding but the opposite direction. So this is my take profit up here as far I want to at least take one off. So it's still pushing up. Let's go to 2 minute chart and take a look at it. See on this on the 2 minute chart, it's a beautiful swing low. So I wanted to make my next series on swing lows, but I've got a lot of questions about fair value gaps, so I just wanted to answer some of these, get you guys up to speed on them so you can start trading. So we have another fair value gap here. So we have 1, 2. Let's go ahead and move this over. So let's move this here. So now this is second push. I'm about to 7:15 is my stop time. I try not to trade more than an hour, hour and a half at a time. Even less than that, like 45, 30 to 45 minutes is long as I like to trade in one session. I just have times a day that I like to trade. I like to trade the New York Open right before 11 o'clock. I like to jump in. So let's go ahead and add 2 here. So now we're 4. See how I respected it? And I just mark it in. You can just mark it in with futures. You don't need to do anything else. So now I'd like to see one more push up where I can get out of the position. Alright, now it's pushing up. I'm going to sell into strength here. Selling 1. And then as it keeps pushing up, I'll just sell. Sell 2. I wanted to come back down in this fair value gap, show you guys, but it just never happened. So I'm going to have to edit this down because all these screen recordings this morning are adding up to quite a bit. But so I'm going to sell another one here. Now I want to see it push through here. I don't want to see it reject again. If it rejects again, then that's a 3 push pattern, and it's probably going to go down, set a low, and might come down below here. Let's go to 2 minute chart and see what it looks like. Yeah, it looks good on the 2 minute chart. We're still one time framing up here. Let's watch as it pushes up. This is a daily low. So there we go, 200. So now I don't want to see it come back below this little trend line I have here. There we go, and it pushes up. Now what I don't want to see is a wick down, reverse. Like, so can you set limit orders to trade these? I don't think you can. I mean, you can, but I don't. I want to see a reaction first to increase my odds. See now, see what I was talking about? It's pushing down. If it gets below here, I'm exiting. So you could, this down close candle should act as support. So we'll see here if this acts as resistance. This is a daily low on the daily chart. So it would make the fair value gap complete to a sense. And we have another one up here too. So let's see here how it reacts. But I just want to show you guys this rounding that you want to see. See rounding. So 1, 2, 3. That's 3 pushes. If I wasn't long, I would take this short all day. So I'm gonna go ahead and exit here and flip short. then this should act as support, right? If it's going to continue up. And then this is why you need to know about the daily chart. You got this acted as resistance short term. I'm sure it's not going to hold for very long, but let's go to the 2-minute chart. But knowing about them makes a lot of sense, right? Because if you were just long and expecting it to keep going, you know, there's a daily low here that could act as a resistance. So right now we're pushing down. Now I want to go back to the 1 minute and see if it's, see, this is acting as support. Down close candles in a bullish scenario are going to act as support. So we'll see what it does here. It's probably going to stop me out. Yeah, it's putting in a swing low. See this now, if it comes down, test, and then blast. So I just want to show you guys that. So I'm going to exit and continue working on the video. Give it a chance here and see what happens. I think Al Brooks talks about these channels. He has some data on once the channel is broken, there's like a 70% chance within 3 candles that it will break the pattern. So once it breaks the top, then it will break the low of the channel. So Al Brooks is a very he's on YouTube as well. His price action trading is very good. So this is acting as a support here. I don't like it. So I just want to explain something to you guys. Like, the trend is your friend. So you can totally see, like, today we're one time framing up, right? And if you're on a smaller time frame and you don't see the overall trends up, and you're taking bearish fair value gaps, they're gonna fail on you. Not every time, but most of the time they're gonna fail. Like, let's go ahead and look here at on a smaller time frame. So let's find a fair value gap. So it actually isn't any because it's just so bullish. Here's one. So you had a fair value gap there, failure. Let's go to 1 minute. You can see more. I know a lot of you guys like the 1 minute chart, but for me personally, it's trash. So let's look here. So you had a fair value gap here, failure. Fair value gap here, failed. Another little micro one, failed. A whole set of fair value gaps, fail, 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 failed. See how the 2 minute only offers one bearish fair value gap setup that you could have entered and failed on? Let's go to the 1 minute. See how many more opportunities there's been for you to get wrecked on these fair value gaps? That's one of the reasons that I like the 2 minute. You don't see fair value gaps pop up that are going to end up hurting you. Most time, if you see a reaction like I've been teaching you guys at a fair value gap on the 2 minute, they're going to hold. I just don't trust the 1 minute chart. I know ICT trades with it, but he's also the inventor of these concepts, you guys. So you need to understand that just because he does something doesn't mean you guys should be. You guys need to, the best time to trade the 1 minute is like high volatility environment where like a news release or something like that. Or in the Asia session, I like to use the 1 minute chart to find volume imbalances to help me decide direction. The algorithm is pushing price up for either to equal lows or equal highs, or to fill in a higher time frame fair value gap. So you have to mix the higher time frame with the lower time frame to have any shot at figuring this stuff out, guys. Because the parent order flow, as ICT says it rules. So if we go to the daily chart here, it is ripping up. Like, these 2 big bars are ripping up. So as you can see, so you don't want to be taking short fair value gaps right now. It doesn't matter if they're the best looking fair value gap in the world. It's not going to work because that's not the direction the higher time frame is heading. So I've had a lot of people ask me about, like, why isn't this fair value gap working, or why isn't that one working? It's not working because the higher time frame algorithm is pushing price up. Yeah, you may get little tiny pullbacks here, but it's a trend day up. So you're not gonna, the bear fair value gaps are not gonna work. You have to go with the trend. A good way that I used to do this when I first started trading is I'd use this fair value gap indicator, and as soon as you open your chart on a lower time frame, what do you see? Bullish fair value gaps everywhere. unfilled ones at that. So that means that the institutional order flow is bullish. So that means you should be taking bullish fair value gaps until a bear fair value gap works. That should be a rule for you guys. Is it used to be one of mine. Is I was not allowed to trade bearish fair value gaps until I seen one hold. That would be like a change of character. Like, so right now the price action character is bullish fair value gaps are holding and working. So there's no reason for you to be shorting. No reason at all. Until I see a change of character where bearish fair value gaps are holding, I'm not interested in taking them. All right, next concept here, moving on. Okay, so let's go ahead and go over what we have learned here. So you need to combine high time fair value gaps and low time fair value gaps to increase the odds of your trades. So meaning that if you see a fair value gap on the 1 hour, highlight it out like I showed you guys, and then go down into your entry time frame and highlight a fair value gap, and then the time frame that you're entering on, that will increase your odds quite a bit. Another thing that I forgot to put on the slide here is OTE, optimal trade entry. So you're going to want to enter um, on that leg that you're trading, you're going to want to enter is 0.79 through 0.65, I believe, or 63, and that is the OTE zone. And then trade with the high time trend to increase the odds. So if you're fighting the high time frame, you're going to end up failing no matter what you do. So you need to check the higher time frame, see which direction it is going, and trade with it. And then I also showed you guys that little trick with the fair value gap indicator. Turn that on, and then that will show you if it's blue fair value gaps that are everywhere. That's the trend is bullish, so you want to trade with it. The right time of the day. So you don't expect fair value gaps to trade very well in a choppy environment. And choppy environments usually happen at a certain time of day. So trade when the volatility is there, like the New York Open, London close, and then the afternoon session. So it's time and price, not price and time. All right, let's go ahead and move on to the next slide here. If price is respecting bearish fair value gaps, then bullish fair value gaps are unlikely to hold. That will greatly increase your odds and show you the direction to come. Number 5, the V for entering. So I went over that earlier in the video. So I showed you guys that if you wait for reaction, it's better odds, better risk management, and it's just overall better to wait for a reaction. Rounding, aka swing lows, to increase your odds. So especially when you're on low time frames, you want to see swing lows being put in, and that if you enter after swing lows formed, the likelihood that the fair value gap is going to work is going to increase. So I hope these concepts, I could go on for days. There's still so much more information that I could share with you guys about these fair value gaps and how to trade them. But these are the major ones that I see. So if you like this video, please subscribe and like, and the next series will be on market structure. Thanks, guys.